Hello, everybody, and welcome to the Like Totas channel. Happy Friday to every single one of you, dear viewers. And what a week of investing this one has been. Needless to say that panics cause the best buying opportunities in the market. And that is exactly what happened this week when everybody was puking in the hole. We were taking the great opportunity to add to some of our current positions in the portfolio. And this has played out marvelously. Okay, hopefully you guys were able to take advantage of some of that as well in your portfolios, especially if you are following the channel. Then I'm assuming that you are also following the framework, right? That you are also making decisions based on the framework that we discuss here at length. And if you do that, then I'm pretty sure that you are now smiling very wide. Okay, all right, everybody, today's video is going to be on Alibaba and why I think the stock is finally a buying opportunity for those of you who were asking me questions about it. Should I buy at $190 a share now that the stock has come back down to $120 a share? Yes, now is the time to finally buy. And in this video, I will break down that investment thesis, why I think BABA is not going to go anywhere but higher over the long term. And by the way, one of you, dear viewers, also left a comment right here, and I couldn't help but smile. You said Alibaba down 20% since my last video. Yes, it is down. This is not a channel that is focused on trading, right? So if you guys are looking for a quick buck, this is definitely not the place to be. Go back and watch several of my videos on Alibaba, and every single one of the position of my every single one of my videos, and you will see that we always make decisions thinking as a business owner, certainly not as a speculator or a trader. I have no idea what the market is going to do over the next few months or weeks. I couldn't care less. I make decisions with the long term in mind, and that is all that I care about. And if you don't think Alibaba is going to be a better business in 10 years, then it's definitely not the right investment for you. So Alibaba down 20% since this video. Yes, and I love that because I've already been telling some of the people that I'm working with, of course, and they have already starting new positions in this company, my clients. So that makes me feel very happy, not least because that gives them international exposure. And everybody, yes, I think international stocks will continue to outperform over time. So this was the case in 2025. I expect this to continue to be the case in 2026 as the US stock market rolls over. Even if it doesn't roll over, if it stays flattish, even if it goes up, it doesn't really matter because as the dollar continues to come down, I do think you will see international stocks catching a bit. And countries like China that are trading at one of the lowest valuation levels in history stand to benefit. And you can see this right here. This is the global stock market valuation, Shiller CAPE and price to book, significant regional valuation differences between country indices. So if you want to chase the shiny objects in the United States, good luck. I prefer to, and by the way, they are off the charts, literally. I mean, you can see that right here, together with China, right? But then if you look at China, together with India. But then if you look at China, this is where we are. And yes, it's one of the lowest valuations ever. And they also happen to have the cheapest AI player in town. I love it. Okay, so this makes me feel very, very happy because as the money flows out of US equities, I do expect that I expect that money to flow into countries like China, namely the major players. So I'm not a guy that will ever invest in several companies in China because I doubt their accounting practices, to be honest. However, I think the biggest players, namely JDs, the Babas, and the Tencents of the world, they are quite transparent in the way they report. And so I prefer to trust my money with management teams that show integrity. Let's just leave it at that. So let's talk about Alibaba and why I still think this is a good investment. You guys know me. I started buying Alibaba shares around 70. Well, I started buying around 100 actually, and then the stock plummeted all the way down to $54 a share. And when many people, maybe some of you were even watching this channel, well, no, because at the time I didn't have a channel, granted, but many of you, I'm pretty sure, were puking in the hole, and I decided to buy even more because I didn't believe that the fundamentals had changed one bit. And sure enough, the stock rallied substantially. And then what we saw, so I started buying right here. Okay, so I'm sharing the screen right now. Started buying around these levels, $115 a share, and then I continued to buy on the way down. I brought my cost basis down to about $74 a share. Then the stock spiked to 180. At 107, I was getting messages asking whether they should invest in shares or if they had missed the boat. And I said, listen, I think at this time you don't have that margin of safety relative to the company's valuation. I still think there is room for upside, which is why I'm still holding my shares. However, it's no longer as attractive as it used to be. What do you want me to say? Now that the stock is back down to 120, now I don't receive any share. I mean, you can't make this stuff up. That's why many people will continue to underperform no matter how long they've been invested in the stock market. This is not a game for everyone. I mean, you are either patient and you understand what you own, or you are impatient and you're going to end up chasing the shiny objects, and you will blow up your account over time. So it's just what it is. And speaking of the 120 level, this is incredible because look at this line. I'm not a technical expert, as you guys know. In fact, I don't really care much about this nonsense. But you can see right here that this line at 122, it was resistance at one point. As you can see, now we broke out of that, right? We came back down to retest it, and look how nice this thing is bouncing off of this line. Interesting. But that is not why I think you should be buying the shares. In fact, I don't think you should be buying at all. I'm just telling you what I do with my money. This is not financial advice. This is always for educational purposes. Always make sure that you consult with your financial advisor or whatever. Make your own due diligence. All right. That said, I think this level provides a very attractive entry point because if I go right here to the charts, what you can see is that Alibaba, as you know, is going through a transitional period. So they are moving from a pure e-commerce player to a full-blown AI giant, right? That transition is going to cost them a lot of profitability over the short to medium term. I don't expect that to change over the next, over the next year or so. I mean, I expect us to only start seeing meaningful differences in 2027, and that seems to tie nicely into what analysts are projecting, and we will get to that point in a bit. But what you can see is that earnings per share, of course, have plummeted. And by the way, the PEs and all, the P ratio, it's not a very. It just gives us a very quick insight into whether the company is cheap or into how attractive the company can be from a relative standpoint, right? Because these are all relative measures. But the point here is that Alibaba still is as a conglomerate of several businesses, and some of them are still unprofitable. And so the PE evaluation metric like the PE doesn't capture that future earnings power, right? So you have to take that into account. But that said, we will use a very quick PE assumption, right? Based on what analysts are forecasting, and we will determine the attractiveness of this company as an investment at today's prices. And so what you can see, the reason the stock has come back down is because of all the investments they are making, and I think we have to be aware of that. If I go here to the financials, to the trailing 12 months, in fact, take a look at the last quarter. You can see that revenue spike. Okay, but this, I don't want to see that. I want to see net income to see what happened. And you can see, for example, that net income, what's going on? Look, it was actually negative, and the earnings per share have plummeted a lot. All right. And so, do I think, and so, yes, profitability is definitely taking a hit. And by the way, if you look at the free cash flows, this is the quarterly, but you can see, in fact, why is this not, is this accurate? So this is the quarterly screen. Let me show you stock analysis, because that will allow us to get a better reading of the company's record over the last 10 years. And I want you guys to see that difference. So if we go here to Alibaba, and then if we move here to financials, cash flows, and this is the free cash flow. And this is what you have right now. All right. So this is on a quarterly basis. Look where we are. There is no doubt that free cash flows have been significantly, they have taken a big hit due to all the reinvestments that the company is making. In addition, if we go right here to the trailing 12 months screen and we look at the investments in plant, property, equipment, look at this, right? This is staggering, absolutely mental. But this is what's happening across the board. These main AI players, from Microsoft to Google to Amazon and Baba, are spending a ton of money to spending a ton of money to remain leaders, right, in this AI race. Well, to win the AI race, or at least to be among the most important winners. In Alibaba, in order to stay competitive and relevant in the space, then they determine that they have to make these investments. The key here is that we want these investments to turn into profits down the line, and analysts seem to have that idea as well. So what do I mean by that? If we go right here to stock analysis again, let's go there now. Here we are. And if we go here to the statistic, in fact, if we go to forecasts, this is what you can see. If we scroll down, you can see that forward fiscal year 2026, they are expecting earnings per share of about 42.10, and then fiscal year 2027, they are expecting earnings per share of around 62.91. This, of course, is CNY, so we have to convert that to dollars. Once you do that, I believe you will get something around 10.22, as you can see right here. So let's do the math, ladies and gentlemen. And right now, what you can see is that with this is the stock, and this is the current PE, as you can see. Now, if analysts are right, and if we see that, so that's about 10. Let's just use 10 for simplicity's sake. And if we assign to that 10 a P of 20, then what you can see is that will translate into a $200 per share. It will translate into $200 a share. Okay. And that is because if Baba does go on to deliver that kind of growth, as analysts are projecting, and so it makes a lot of sense that the PE will expand from its current 23 it makes sense that the PE will stay at least at 20, right? I'm not even considering a higher PE. I'm just being conservative right here, because that is the PE in all likelihood. If Baba goes on to deliver on those growth assumptions, that is the PE, the minimum PE that will in all likelihood be assigned to the company. And that in and of itself will make Baba a $200 a share company. So, I mean, what else do you want me to say? And this is I'm just considering for fiscal year 2027. I'm not looking beyond that, because the key thing that you guys have to understand here is that if Baba, and I do believe that many of these investments will be turned into profits, right? Will convert into profits, then you have a very, very good investment right here. And once again, the PE misrepresents the company's future earning power exactly because several of their business segments are still unprofitable. So keep that in the back of your mind. So we already have more margin of safety factors built into this very simplistic analysis. But I mean, you can see that even if, for example, you assign it a PE of 15, right? At 10 multiplied by 15, even that will be a higher price relative to what we are seeing here right now, because that would mean a 150 share price versus the 128 share price that you can see today. Okay, so I hope this makes sense, guys. I want to make sure I keep this video short, and hopefully I explain to you exactly why I think Baba deserves a place in your portfolio. Let me break that down once again. Just a quick wrap up. Number one, I do expect the dollar to continue to lose purchasing power versus other currencies. And what we saw going back several decades is that every time the dollar loses its purchasing power, international stocks tend to outperform. I expect what happened in 2025 to continue into 2026 and into 2027 as well. This means the dollar losing purchasing power and internationals outperforming. I also think Baba continues to be, despite this rally since the lows of 55, right? If you are panicking, is because you probably bought it at a much higher stock price because you didn't believe the company would go lower. You had no margin of safety, but that's why you are watching these videos. Okay, cool. So I think this company can easily get another double from these levels, which is why I haven't sold a single share. And yeah, so I mean, it continues to be, as I was saying, the cheapest AI company in the world. And not only that, the vast majority, so I think about 50%, almost 50% of their revenues still come from the e-commerce, right? And that includes Taobao in Tmall in China. And we, as the Chinese consumer starts to spend once again, Baba, as the largest e-commerce player in the region, will definitely catch a bit. I mean, because they sell quality stuff at a reasonable price, unlike a PDD, right, which sells rubbish junk at a very attractive price. So, yeah, that's just my understanding. And I think you have several exits because they are not an e-commerce player. They have also cloud, right, and AI. They also have all the other stuff, all the other business segments, logistics with Kainao, and so on and forth. So multiple exits, a very attractive valuation level, and I think investors at these levels tend to benefit. So we will see what will happen. As always, do your own due diligence. That is just my take on it. Everyone, have an amazing rest of your week. And by the way, don't forget, look at the price target. Analysts are assuming a 44% upside potential, right, from current levels with a price target around 185. I mean, that is this is a significant upside potential. So anyway, always do your own due diligence. Thank you, everyone. Have an amazing weekend. Be a tortoise.